How's it going, guys? Today we're going to talk about RKT. That's a ticker symbol for Rocket, and we are having a little bit of extra fun news about shorts as well, which you guys have covered a lot of on this channel. Right now we have the Webull application with RKT closing today at $24.30. It is up 11% on the day and is already up 5% more in after hours. So it's a stock to make sure to put on your watch list. We have an article on Wall Street Bets about RKT CEO forcing shorts to pay for their own squeeze by March 9th. So RKT CEO Jay Farner hates shorts almost as much as we do, and they're going to outline exactly what this absolute Chad has planned for them. His company, RKT Mortgage, literally smashes every ER by a country mile, and he's tired of his stock being held down by these spineless cowards. Farner is going to actively go to war with them, Elon style. Let me outline how this mega CEO is going to force the shorts to squeeze themselves by March 9th. Farner, along with the company founder Dan Gilbert and the leadership team, own 95% of Rocket Companies. There's currently 113 shares outstanding. 38% of these shares are short, and CEO founder own 95% of the $2 billion float. Note this for later. So let's do a quick math lesson. 38% of 115 million is 43 million shares short. Now the fun part. In their most recent investor meeting, RKT rolled up to the short store like the dancing pallbearers, introduced a $1.11 share special dividend to be paid to anyone holding RKT stock by March 9th. That could be you. So what does this mean for the shorts? Well, we've arrived at the BDE moment. Shorts have to pay the dividend. Shorts have to pay $1.11 for every share that they are short on March 9th. Yes, I know, Meatball, this is exciting. Buyback program. What else was in that juicy investor conference? Wait for it. $1 billion buyback program. See, RKT makes so much money they can afford to not only have a special divvy, but a $1 billion share buyback. I'm telling you, this man is going to go to the trenches and clearing the shorts out by himself. Too long didn't read. RKT was supposed to RKT has been suppressed for way too long. The company owns 95% of the shares, and Jay Farner / Dan Gilbert hates shorts, and they have diamond nuts. They aren't leaving. Shorts have to cover their 43 million shares, or they are forced to pay $1.11 per share they are short on March 9th. Also, if you can't do math, if you buy shares and hold through March 9th, it's an instant 5% return via the special dividend. Also, be careful. I'm not trying to tell you to go buy it before March 9th. I'm just saying that this is some DD that someone on Reddit has created, and now we are looking into it. This is the kind of content you can find on this channel. So that's why that subscribe button is waiting for you. Join the MBA. The Meatball Army is waiting with you for open arms. So let's also read a couple of articles, one about RKT or SSTI, which is the better value stock right now, and this one that we're going to start with, understanding Rocket Companies' unusual options activity. On Monday, shares of Rocket Companies saw unusual options activity. After the option alert, the stock price moved up to $23.84, and we see that it closed at $24.30. Sentiment bullish. Option type sweep, trade type call, expiration date the March 12th, strike price $24.50, volume 1,000, and open interest 161. 3 ways option activity is unusual. Exceptionally large volume is one way options activity can be considered unusual. The volume of options activity refers to the number of shares contracts traded for a day. Open interest describes the unsettled contracts that have been traded but not closed by a counterparty. In other words, for each contract buyer, there must be a seller. A purchase contract remains open until a seller closes it, and vice versa. When a contract has an expiration date in the distant future, it is generally another sign of unusual activity. Usually, additional time until a contract expires allows more opportunity for it to reach its strike price and grow its time value. Time value is important to consider because it represents the difference between the strike price and the value of the underlying asset. Contracts with a strike price far from the underlying price are also considered unusual because they are defined as being out of the money, OTM, or above the strike. This occurs when the underlying price is under the strike price on a call option or above the strike price on a put option. They're essentially the opposites. These trades are made because the underlying asset value is expected to change dramatically in the future, and the buyer or seller can take advantage of greater profit margin. Understanding the sentiment here. Options are bullish when a call is purchased at near ask price or a put is sold at near bid price. Options are bearish when a call is sold at near bid price or a put is bought at near ask price. These observations are made without knowing the investor's true intent by purchasing these options contracts. The activity is suggestive of these strategies, but an observer cannot be sure if a bettor is playing the contract outright or if the options bettor is hedging a large underlying position in common stock. For a latter case, the bullish options activity may actually be less meaningful than the exposure a large investor has on their short position in common stock. Trading positions with these strategies. Unusual options activity is an advantageous strategy that may greatly reward an investor if they are highly skilled, but for the less experienced trader, it should remain as another tool to make an educated investment decision while taking other observations into account. So there gives you a little sense of what people are looking at when they mean suspicious options activity. And finally, you know you have options, Rocket or SSTI, which is the better value stock right now? Well, investors looking for stocks in the technology services sector might want to consider either Rocket Companies RKT or ShotSpotter, which is SSTI. But which of these two stocks is more attractive to value investors? We're going to have to take a closer look to find out. Everyone has their own methods of finding great value opportunities, but our model includes pairing an impressive grade in the value category of our style score systems along with that's too big. Everyone has their own methods for finding out great value opportunities, but our model includes pairing an impressive grade in the value category of our style score system with a strong Zacks score. The proven Zacks rank emphasizes companies with positive estimate revision trends, and our style score highlight stocks with specific traits. Rocket Companies have a Zacks rank of 2 buy, while ShotSpotter has a Zacks rank of 4 sell right now. Investors should feel comfortable knowing that RKT likely has seen a stronger improvement to its earnings outlook than SSTI has recently, but this is only part of the picture for value investors. Value investors are also interested in a number of tried and true valuation metrics that help show when a company is undervalued at its current share price levels. The value category of the style scores system identifies undervalued companies by looking at a number of key metrics. These include long favored PE ratio, PS ratio, earnings yield, cash flow per share, and a variety of other fundamentals that help us determine a company's fair value. RKT currently has a forward PE ratio of of 12.01, while SSTI has a forward PE of 223.89. We also know that RKT has a PEG ratio of 1.2. This popular metric is similar to the widely known PE ratio, with the difference being that the PEG ratio also takes into account the company's expected earnings growth rate. SSTI currently has a PEG ratio of 11.19. Another notable valuation metric for RKT is its PB ratio of 6.82. The PB ratio is used to compare a stock's market value with its book value, which is defined as total assets minus total liabilities. For comparison, SSTI has a PB of 15.6. These are just a few of the metrics contributing to RKT's value grade of B and SSTI's value grade of D. RKT stands above SSTI thanks to its solid earnings outlook, and based on these valuation figures, we also feel that RKT is the superior value option right now. So you have 3 different pieces of information in this article. 1, suspicious options activity. 2, the fact that their metrics are standing behind RKT as opposed to other value buys. And 3, the fact that March 9th appears to be a date in which the CEO of RKT is going to pull some shenanigans, and you could end up making it big just by buying in before the dividends are paid. But what do you guys think? I want to know in the comments down below what you are thinking about RKT. Do you think that it is going to be a good buy right now? And just know for a fact that the amount of conversation you have down below is going to be investments in your education in the financial space. And if you wanted to continue that investment, then go ahead and smash that subscribe button, because that's the first step into investing into yourself. And make sure that you hit that bell button so that you don't miss out on a single live stream. If you want to check out being part of the Meatball Army, the join button is right next to it, and join the memberships and get flares during live streams, and check out a couple of the links down below, because those all help to support the stream. For now, but not for forever, hope you guys have a nice day. Peace.